Welcome to everyone. With this video you will learn how powerful are the cycles and how profitable they are when trading the gold market. This week video will cover the gold market for the week of March 11, 2024. Before we start, make sure you read carefully the disclaimer. To analyze the gold market, I use the GLD ETF. On the 18-month cycle, the long-term target was $200. The $200 marks have been reached on Thursday, March 7th. So the success rate for the 18-month cycle is 100% for this year. The peak of this cycle is expected around July 2024, the red dashed line, and the low for the beginning of 2025, the yellow bar. We will have a more precise time target when the market will unfold on the lower time frame. On the cash price, the gold reached over $2,195, a new record. On the gold future price, the target was at $2,100. Let's examine the 20-week cycle, because on the 40-week cycle there is nothing new. On my last gold weekly update, I was expected the gold ETF confirm the crossing this week. With this week crossing confirmation, we had the official confirmation on the 20-week cycle low on February 14th. Like I mentioned last week, the crossing occurred at 190.46, providing an upside target at 197, with a potential profit of $6.68 or 3.5%. This was the minimum target, because the 18-month cycle upside target was $200. On Thursday, March 7th, the gold ETF make a new all-time high at 200.11, right on the target. How did we get this target? We subtract the crossing point from the last low number, made below the cycle line. Then we add the result to the crossing point. A very important precision. To be a valid signal, at the crossing point, it must be the median price line cross above or below the cycle line. And when there is two cycle lines, the median price line have to cross above or below the cycle line. Like for example on the 40 and 80 days cycle chart. In this case the crossing point was 190 and the previous low was 183.78. So 190.46 minus 183.78 is 6.68. We take $6.68 add to the crossing point 190.46, the target will be 197.14. On Tuesday, March 5th, the gold ETF made a high at 198.14, meeting his 20 weeks target, this in 2 days only. If trade the Monday signal, the profit is 3.5% in 2 days. The success rate for the 20-week cycle is 100%. The trend for this cycle is up, because we are in the up phase of the cycle. If you want to learn more about the target calculation, I posted below a video about understanding the cycles. I explain in detail all the secret behind the cycles. That's the power of the cycles. The rate of success is usually very high. The following table is the success rate table for 2023, proving the efficiency of trading the cycles. On this table you can find the success rate of different cycles for different markets. What the percentage means. It's the percentage of the target have been met after the signal have been triggered, on the upside or on the downside. We allow a margin of error of 1% and for some market like gold 0.5%. As we can see, the success for all different markets are very high. The less productive is the Dow Jones Industrial Average and the US dollar 40-week cycle and the gold 80 days cycle. How to use this table? We can choose which cycle of which market to trade according to his success rate. Of course, past performance doesn't guarantee the future results. The 80 days cycle. The last 80 days cycle low formed on February 14th at 183.78. The last trading signal was on February 21st, when the gold ETF crossed above his first cycle line at 187.67. And the second line have been crossing on February 23rd at 188.33. The crossing provide a target zone between 191.56 for the lower part and 192.88 for the top part. For a potential profit of $3.89 and $4 respectively, or between 2.07 and 2.42%. With an high at 193.40, the gold ETF meet and exceed his target on Friday, March 1st, 16 days later. The success rate is 63%. We are in the up phase of this cycle, and this until at least March 20th, when the 80-day cycle should start to form the peak, the red dashed line. Since the market is very bullish, there is a high probability the peak will occur later, on the right part of the cycle. The next 80-day cycle low is expected to form on April 22nd. Technically, at that time of the cycle, the gold ETF should cross below his cycle lines and providing a downside target. But since there is a lots of bullishness in the gold market, there is a possibility the gold ETF should find only support on his cycle lines. The 40 days cycle. The 40 days cycle pointing downward, the peak for this cycle was expected on March 8th, but since we are in a bull trend, there is the probability the 40 days peak will occur after this date. The low is scheduled on March 19th. The last trading signal was on February 23 when the gold ETF crossed above his first cycle line at 188.39. Providing the lower part of the target zone, but to be a valid signal, the gold ETF have to cross the both lines. The top part of the target zone is 193, or $4.61 or 2.45% of potential profits. The second part was triggered on February 29th, when the gold ETF crossed above his cycle line at 188.26, providing the lower part of the target zone at 192.74. On Friday, March 1st, the gold ETF meet and exceed his target. The success rate for the 40-day cycle is 100%. What's next? Like mentioned above, the gold ETF should form his peak very soon. Even if it was expected on March 8th, I believe that could occur around March 12th. At the time of the gold ETF will form his first 40-day cycle low, we can expect this low will form on his cycle lines. Those cycle lines will be around 188.30. Due to the bullishness of the market, there is a very high probability the gold ETF won't be even close to his cycle lines. The 20 days cycle. The last 20 days cycle low occurred on February 28th, right on his cycle line, like expected, and the present 20 days cycle low is scheduled for March 18. Cycle low. On the chart we have the 20 days uptrend line, the green line. This trend line will help to identify the 40 days cycle peak. When the gold ETF will cross below this trend line, this will confirm the 40 days cycle peak is forming. The last trading signal was when the gold ETF crossed above his cycle line on February 23rd at 187.43 for a potential target at 191.08. On Friday, March 1st, the gold ETF meet his target for a profit of $3.65 or 1.95%. The success rate is 100%. The cycle trend is down, since the cycle pointing downward. What's next? On my last update I published the following roadmap for the next 2 months. Where are we on this roadmap? Since the 40-day cycle is forming his peak, so we are around this area. On the February 28th, the gold ETF found support on his cycle line, forming the 20-day cycle low. Then rally and make a high higher than the previous one, as expected. Now the gold ETF should technically cross below his cycle line, providing a downside target. The 40-day cycle low should be very close to the 40-day cycle line and made a low around March 19th. Then the gold ETF should rally again, crossing above his cycle line, providing an upside target. Around the first week of April, the market will cross again below his cycle line, providing a downside target for the 80-day cycle, with a first low on April 11th. Then rally using his cycle line as resistance, and resume his decline to form the 80-day cycle low on April 22nd. We have to keep in mind, due to a good amount of bullishness in the gold market, there is a possibility the gold ETF doesn't cross below his 20-day cycle line to form the 40-day cycle, but find support on it. The 10 days cycle. The trend for the 10 days cycle is down for Monday and Tuesday and up for the rest of this week. Even if it doesn't look very obvious, the last 10 days cycle low was on March 5th. When the market is very bullish, the very short-term cycles are sometimes not very easy to identify. The next one is scheduled for March 12th. The last trading signal was during the last long weekend when the gold ETF crossed above his cycle line at 186.26, providing an upside target at 189.19. With a high at 189.18 on February 23rd, the gold ETF met perfectly his target. For a profit of $1.93 or 1.04% on only 4 days. Since that time, we didn't have a new signal on the 10-day cycle. The success rate for the 10-day cycle is 90%. In conclusion, even if the monthly $200 target have been met, the long-term cycles are still bullish until the summer. On the short-term picture, we expect the 10, 20 and 40-day cycle to start a mild correction anytime soon. If you like this video, don't forget to click on the like button, subscribe to make sure you don't miss any future videos. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.